Hey Ross World, my money makes money. Today I'm just going to briefly talk about how to invest in single stocks. Lately I've been going off and talking about ETFs, exchange traded funds, which is basically you having a portfolio, and within that portfolio you are investing into many of stocks. Like take for instance, I just recently did a video not too long, which you can reference right here, talking about Stash. And Stash, they do ETFs. And they have these really cool portfolio names that they invest in particular companies. Now, you're not investing in individual stocks. You're investing into fractions of a stock. So you're not only a whole stock. So that's what you probably would use this app right here that I mentioned before called Robinhood, where you would invest in individual stocks. So what's the big difference? The big difference is with Stash or apps like Stash or companies like Stash, ETFs, you're only owning fractions of a stock. Whereas though with Robinhood and other investment people, you'll be owning one entire stock. Now, owning one entire stock is a little more riskier because if that stock does badly, it doesn't have those other stocks to kind of support it if you were to invest into an ETF where you have a portfolio of different stocks. So if you do bad in one area, you can probably do great in another area. And once again, you're not investing into one whole stock, you're just investing into fractions of a stock. Okay, so that's the big difference. So take for instance, you on Stash and you see a portfolio, say American Innovators or Roll with Buffett, and then under that they list all these different stocks that they're investing within that one portfolio, fractions of a stock. Whereas though, like myself, I'll give an example, I invest in IBM. So if IBM does well, I make great money, but if IBM does bad, I lose money compared to if I was investing into a portfolio in Stash and IBM was one of the companies listed within that portfolio. If IBM does bad, and let's say for instance Google does good, I will still probably see a return depending on the percentages that are within each stock, those fractions. So you might say it's kind of difficult to understand, but if you take a pizza, for instance, IBM is the pizza, okay? So that pizza is nasty, okay? You're gonna throw that pizza away. Hopefully this is a good enough example. That pizza is nasty, so you're gonna throw that pizza away. Whereas though American Innovators, and this is this for example, you have IBM, you have Google, you have Facebook, and all these are different slices, okay? So you throw that IBM slice away, guess what's still making you money? Google, Facebook, ETFs. But you're saying, okay, why invest in individual stocks if I can just do ETFs and still make money if one particular stock does bad? Good point. The returns are different because you will only be making a fraction of the amount of money that you would if you own the entire stock. So take for instance, when I first bought Google, the stock was $500. Today the stock is $800. But if I only invested in a fraction of Google, then I will only receive a fraction of the money. Yes, single stock investing is very, very risky. But what helps me and that will help you is basically two things. Now, there's other factors, but basically two things that really, really entails a lot of information. Research and analytical data. I look at analytical data and I do my research on a company, and it really doesn't take me that long. It really, really doesn't take me that long. You read about where that company came from. You can track the graph on these investment sites or even on Google Finance, and you can see from day one, month one, the first year, 5 years, how that stock has potentially grown or decreased or flatlined through time. This is very important because now you get into the analytical part of it to see the trend of how that stock is. Now, also with that research, it's very imperative to note that you have to understand, you have to read stock market news because this is where they release information about the new upcoming thing or event or invention or whatever that company is trying to do is important because you can project and also the market project is that stock going to raise, stay the same, or decline? That's also imperative news for you to know if the CEO is corrupted or anyone in the company, the financial managers, the CPOs. That will really give you futuristic knowledge of how that stock is going to do. And you say, hey, that sounds like a lot. Yes and no. Because it really only takes me, depending on how many individual stocks you have, it really doesn't take me no more than 30 minutes. And I have maybe my portfolio of individual stocks is about, I want to say 20, okay? IBM, Coca-Cola, Walmart, Tesla, Google, Berkshire Hathaway, the B stock, not the A stock, because the A stock is, I think, is $252,000 a stock. Yeah, I don't have that type of money. And a couple more. So really do your research for yourself. I just give out this information to encourage you to do your research, to encourage you to invest, because no one, my famous line, is going to take care of you more than you taking care of you. Whether you're single or you're married, you just don't know the future. Hopefully this has helped somebody to get their mind right and start to invest. This is Ross World. My money makes money. I'm out.